do, as is tradition, at the end of high noon highlights, I like to go over our current positions, our current indicators that we're looking at, and the current trade plan. Okay, so indicators: HYG 77.90, key level for the day. You know, if we are bearish on risk assets, we want to see HYG continually close under 77.90 and then close lower. You know, as time progresses. Okay, we want this coming down. All right, TIPTLT, very important to watch. This plus all the commodities. DBC is the ETF for broad commodities. I'm keeping a very close eye on this. If this starts curling up with DBC making a new higher high, that could be the start of the next wave of the inflation trade again. All right, so keep an eye on that. The dollar, I mean, the dollar, if you're trading any risk asset, anything, okay, you have to look at the dollar. All right, the dollar still above its 18-day moving average. All right, still going up. Oh, now it's at the 2 standard deviation Bollinger Band. Do we cool off a bit, or is this going to ride the Bollinger Band up? Riding the Bollinger Band up would be a huge risk-off signal for dollar, okay? That would be a huge risk-off signal for risk assets, okay? EURUSD still coming down. Not a good sign for Eurozone stocks. We'll see what happens to the DAX. After this, AUDUSD, another good indicator. This is a good indicator for China. We are seeing this coming down. So I do know that right now China has made a 3-month high in their COVID cases. So maybe this is what this is about. Also, too, there are certain areas in China where the government has ordered the shutdown of certain factories because of the energy demand, because of the heat that they're experiencing as well. That was announced on Sunday, and we saw huge selling in Australian dollar after that news. So maybe some bad news, or maybe some bad industrial output is being priced in now in China. We'll see if that affects the Chinese index. China FXI is down 1.5% for the day. So these currencies are very good indicators. So I am keeping a very close eye on these currency indicators. You know, we've been keeping a close eye on them, but I think we must remain diligent in monitoring this. Okay. All right. So the next thing, high low. All right. The high low are we going to start seeing this curl down? If we do, we can expect this to come down again at the New York high-low line cumulative. If this curls back down and all the moving averages start curling back down again, that just means we're continuing the bear market. All right. If prices fall, but the New York high-low line keeps going up and all the moving averages keep going up, and this high-low cumulative line gets over its 20-day moving average and all the moving averages start pointing upward, that would be a setup for our mother of all buy the dips. Again, those one or the other, you know, that signal is like weeks away in my opinion. Okay, so still monitor this, but again, it's a slower moving indicator. So keep that in mind. It's not going to give us a signal like day to day, okay? But that is out there. If you look at the advanced decline line, though, is coming down. Speaking of advanced decline lines, our advanced decline line on corporate bonds made a huge dip. And if HYG continues down, this will come down too, okay? That would pose a divergence. There is already a divergence where the market is above its June 2nd high, but in junk bonds, the advanced decline line, it's actually a lower high, all right? And if the market ends up today and the advanced decline line ends down, not only is there a 3-month divergence, there also will be a short-term divergence as well. So that's 2 divergences. That just makes our thesis even stronger for one more sell-off before the mini bull market takes over, if we even see a mini bull market, that is. But I do think that we will have a mini bull market later on, but after one more wave of volatility. And I think if this continues down, but the market goes up, that gives us that short-term divergence as well as that mid-term divergence in the 3-month. So that just supports our thesis even more. So I will be posting that later on today. All right. What else are we looking at? We already looked at all the currencies. Let's look at the plan. Okay. Bitcoin, Ethereum, need I say more? We're same plan. Ethereum 1200, or when it gets to that Ethereum gold ratio of 0.6, I think both of them are going to coincide with each other. But we are still waiting on that. It's still kind of in no man's land. What else? We're adding crude oil to the plan, guys. Okay, remember what I said? What we want to see is gasoline. Okay, we want to see gasoline. I want to see gasoline make that higher high. If it makes a higher high and then pulls back a little bit and makes another higher low, and on that higher low, also crude oil pairs back a little bit, that is when I will scale into some vertical call spreads in crude oil or USO. I'll buy some call spreads, vertical call spreads. I'll take profit when oil gets to around this level right here, this 114, 115 zone. And then when it gets to 118, 120, I'm going to buy put spreads on the way down. Okay, so we're going to see, I'm going to do two-way trading on this. All right, we have a level for when we want to buy calls. We got a level for when we want to buy puts. All right, so crude oil back into play. All right, but again, it's going to be based on what gasoline does. Okay, so there's that. What else? HUT, part of our cryptocurrency plan. HUT is coming down. If it gets to 165, I'll buy some more shares. Ford, same thing, coming back down a little bit, although not much. If it gets to 1380, at this point, I don't even know if it's going to get down there, but if it does, I'll definitely scale into some shares. Nothing has changed on that. PPC, same thing. I already went over this earlier today, but if it gets to this 2 standard deviation Bollinger Band, which is around 2870 right now, I'll start scaling in to some PPC stocks as well too. Tesla, I had this part of our plan. If it gets to that red line right here, I will buy some puts on Tesla if it gets there. Okay, that hasn't changed too. SPY, same plan here. We either the mother of all buy the dip signal and I start buying shares, or it gets to 360, it revisits the lows. I will start scaling in very slowly with some shares there too. If it gets to that 342, 343 zone, I'll start getting more aggressive in buying long-term shares, and under 340, I'm gonna buy those in the money 1-year call leaps on SPY. Okay. So that's the plan. That's the indicators that I'm looking at, and that is that. Oh, my my positions. My positions haven't changed, guys. My current positions. UVXY, I'm still in those call spreads. December, same thing. What else? QQQ, I'm still in them. I haven't done anything, guys. I haven't done any, selling of anything. I've just held, okay? So nothing has changed. My positions. QQQ, I'm still in my put spreads. IWM, I'm still in my put spreads for October and November. Same strikes, 180, 170. You can go back in the previous videos and see what my current positions are. Literally, nothing has changed. FEZ, I'm still in those too. The Eurozone. Right here, still in that spread. EWT, I'm still in that spread. Still the same spread for December. Dow Jones, same thing. Okay, nothing has changed. Oh, I took on a lotto yesterday. I took on an HYG lotto, which I still have, which is probably going to zero. probably going to go to zero. But who knows, right? Who knows? We'll see. We'll see what happens. Okay? So no changes except for that lotto. All right? So there you go. Indicators, current positions, and trade plan. Boom. Checkmate trading. Any questions, comments, rude remarks?